Hello, my name is Roelof de Wijs. I'm a professor of insolvency law at the University of Amsterdam, and I've been practicing at an Amsterdam law firm in the field of insolvency for the last 20 years.
Hello, my name is Joost de Vries, and together with Roelof we wrote this very cool book. It's called Corporate Finance for Lawyers. So I am the finance guy. I've been working in finance for 25 years. Roelof is the legal guy, and we joined forces. And in this short movie, we want to explain to you why you should buy this book.
All right. Joost, so you've been teaching lawyers for the last 20 years, and you've been teaching them finance.
Yeah.
So how do you do that?
Yeah, that's interesting. So basically what you will find is that usually teaching is really accounting based, but we solve this and we made it more easy, and we do this by using visualization. So what you will find, we have the financial mind map, and you will find it throughout the book, and it's very easy. Let's show it on the screen. So the financial mind map is a balance sheet and a profit and loss account. And you see the colors on the screen. So you have on your left hand side the green blocks. So these are all the assets. And then on the other side of the balance sheet you will find the interesting story, because these are the stakeholders that are mentioned in this book. So we've got shareholders, blue block people, we've got red block people, secured lenders, and then we've got orange block people, unsecured creditors. And these blocks and these stakeholders, they have fights in reality, and there are frictions. And if you want to work in practice, then you have to understand how this works. So let me show you a very basic pattern in the financial mind map. So what happens if you start working towards financial distress? So most of the time this is related to a lack of turnover. And if your costs are still high, then you run into losses. And if you run into losses, you can see in the balance sheet what happens. Your equity disappears. The question then is, who will solve this issue? And of course, Roelof, what we see in practice is that bankers tend to say stop at a certain point in time, and then orange block people, so trade creditors, they are the ones that pick up the pieces and they finance those losses. So what I show you in this very easy visual is that it's all related. So the gain of one stakeholder is the loss of the other stakeholder. So this is one thing that you should understand.
All right. So I'm in insolvency, so we also deal with insolvent companies as trustees, and we often find banks. Can you go back to the scenario where there's no insolvency yet, and can you show us the perspective of a banker's view on a capital structure? So how does the bankers themselves, how do they evaluate their own position?
Yeah, so bankers, one of a critical stakeholder in a company. So what they do, they've got a lot of very difficult ratios and they've got difficult contracts, but basically it's very, very easy. So they tend to look at two sides. So the first thing they can look at is at the green blocks. So all your assets, that's the collateral. This is what they can sell off when you go into bankruptcy, and of course they hope that they can retrieve enough money to repay their red block. Another position they can take is taking a look at the blue block, and this is what we refer to as the solvency ratio. And this is one thing that lawyers tend to focus on. And then in practice there's something different. We don't look at the balance sheet, but we look primarily at the ability to generate cash flows, because the banker wants to know, are you able to repay your red block and to pay interest? So what we do then, we take a look at this picture again, and then we calculate what is called the net debt EBITDA ratio. So net debt is red blocks minus your cash, it's a balance sheet thing, and then you go to the profit and loss account and you try to figure out what your EBITDA is. So basically these three banking ratios, we just explain it by using this simple image in the book.
All right. So there's a chapter on secured credit as one of the stakeholders. There are also other topics. So we have an introduction about leveraged finance, also the tax shield. And then you have two chapters on valuation, company valuation.
Yeah, and that's very interesting, because if you want to understand business valuation properly, you have to use the financial mind map colors. That means that you have to separate between interest-bearing debt and non-interest-bearing debt. This is very critical, and this is lacking in some corporate finance books. So it's surprisingly. Yeah.
All right. I also found some things lacking. So we wrote a book for lawyers, but we think there's also enough there for corporate finance specialists. So what I found lacking also in the corporate finance books is what happens if you combine blocks. So if you have loans from shareholders. So
yeah, that's an interesting
Is there a
one.
color for that? There's no color here. But
Now, it's not in the financial mind map, but it is in the book. So
right.
we blend these two colors. So we have red blocks from blue block people, so shareholder loans. So of course, if you blend it, it ends up to be purple. And purple blocks are interesting because usually the shareholder gets the money the latest in an insolvency scenario. But if you structure it with shareholder loans, you can skip the queue. So it's interesting. Yeah.
All right, so fascinating from a corporate finance perspective as well. So we also touch upon shareholder guarantees, a chapter written by our third co-author, Aad Jonkers. And we discuss also a new phenomenon, very popular these days, is reorganization procedures, that we no longer sell off the assets, but that we address insolvency by means of a restructuring or a right-sizing of the capital structure. All right, so different topics, I think exciting for both lawyers and corporate finance specialists, but made easy enough for lawyers.
One question. Why should you buy this book?
Why should you buy this book?
Why should you buy this book? So you have to understand the position of those stakeholders. This drives behavior in practice. So if you're drafting documents, you need to understand what your customer is doing. But one of our key elements in the book is it should be easy, accessible, and fun to read, even though that the topics might seem as very complex. So if you want to do this and you want to understand it really how it works, you should buy it. And it's fun.
All right, thank you.
Oh, thank you, Olaf.
All right.